Today, I want to talk about the massive short squeeze that just happened on Friday, which we can actually watch back in real time and use as AMC short squeeze preparation. So stay tuned and let's make some money. As a quick reminder, today is the last day of the Labor Day sale at the Millionaire Mindset Trading Group. Just use code Labor Day, all in capitals, all as one word, to get $100 off the price of the lifetime membership or 25% off the monthly membership. So let's dive straight in with the key information. So, the massive short squeeze that happened on Friday was on ticker symbol TNON or TNON Medical. First, I want to explain how I think this short squeeze happened and then show you the short squeeze and go through it in real time so we can use it as actual AMC short squeeze preparation. So TNON is a stock, a very small stock with just a $10 million market cap. It also has a small float with just 1.73 million shares. Now what that basically means is that when this stock gets started and when it starts going, it can very easily increase massively in share price. I think it started as maybe a hedge fund algo pump where they just wanted to pump it by $1, $2, $3, maybe $4 per share, but it rapidly turned into a massive short squeeze as one hedge fund or large investor or large short seller got stuck, was squozen and was liquidated. We can see in the very early hours of Friday morning, around 4 a.m. Eastern Standard Time, this stock went from $3, $4, $5, $6, $7 per share, and then ran all the way to $132 per share in about 10 to 15 minutes. You can see it down here in the first few minutes around $3, $4, $5 where it starts picking up steam steadily, where maybe even some more short sellers jumped in before a massive liquidation happened, skyrocketing the price. So this stock actually increased by around 4,400% in the span of 10 minutes. Absolutely crazy. Now, the amazing thing is that using TradingView, I can show you this short squeeze in real time using the 5-second chart. What that obviously means is that every single candle here represents just 5 seconds. So you can really see how quick this short squeeze can happen. But it can show you not just how quick this short squeeze happens, but actually how massively some of the jumps are during this short squeeze, both up and down, that can really play with that mental fortitude. So let's start it off right here on this candle at 9 minutes past 4 in the morning Eastern Standard Time, or 9 minutes past 9 a.m. UK British time. So for that whole minute between 9 minutes past and 10 minutes past, the stock price is really ranging in this $6 to $7 region. Fairly boring, it's just steadily grinding up from $6, $6.15, $6.30, $6.40, up to $7 per share. But then very quickly at 10 minutes past, it's at $7.60. Just 5 seconds later, it's at $8.64. 5 seconds after that, $9. 5 seconds later, $9.65. And just 5 seconds later, it rockets to $14. Then it starts getting really spicy because it rockets from $14 up to $29, but then back down to $15, back up to $30, and then to $32. But then here at 10 minutes past and 45 seconds past, it rockets from $32 to $130, but 5 seconds later falls back to just $32 and then $35. So we're seeing nearly $90 swings in the stock's price in just 5 seconds. And again, even before that, we're seeing $5, $10, $15 swings pretty much every 5 seconds as well. Again, then it ranges from $32 up to $37 before falling back to $32 before increasing again up to $52. Again, it then very quickly falls back to $40 before going back to $50, up to $58, back down to $50, up again to $60, and then again back to $120 per share. So in literally a 3-minute period from 9 minutes past up to 12 minutes past, literally just 3 minutes, the stock ranges from $6 to $130 per share. Now with the AMC squeeze, I imagine it's going to take much longer than just 3 minutes, as we're going to have not just one hedge fund being liquidated during the short squeeze, but we're going to have 5, 10, 20, 50, maybe 100 hedge funds being liquidated. It could happen all in one day, or it may take a few days if some of these hedge funds are overseas. But it really shows you just every 5 seconds how massively these swings in the price can actually be. But what it can also prepare us for is the backside of the short squeeze and what the backside of the short squeeze actually looks like if we do miss the very tippy top. Now again, in many of my previous videos over the years, I've suggested you sell in chunks, selling on the way up, so that at least some of the shares you can sell at the very tippy top, and then maybe some of the shares you sell on the way down as well. This way you can be sure to time at least some shares near or at the very tippy top, and most of your shares being sold around that tippy top price either just before or just after. At least that way you don't hold all of your shares all the way to the top and all the way back down again, thinking it will have a second squeeze or a second momentum run. Because actually with TNON we can see it does actually have a second run, even a third run, but it all happens very quickly. We have this first initial run up to $130, a sharp pullback, a second push up to $134, and then it pulls back even harsher before again popping back up for a final time before selling off for the rest of the day. So obviously, ideally, we want to be selling most of our AMC squeeze shares right here. Some on the way up, maybe some in the pullback, some at the very tippy top, some here on the second pullback, and maybe some final shares on the last pop up. But we can see that really after this second or third pop up, there's very little recovery that happened throughout the rest of the day, and the short squeeze on TNON was over. If you didn't already know, Mumu have just released cash accounts with no share lending. Right now you can currently get up to 15 free shares if you join Mumu using my link in the description below. Not only do you get up to 15 free shares, but you also get 8.1% interest on uninvested cash. And importantly, with cash accounts, share lending is disabled, meaning none of the shares in your account will be lent out. Now, I also wanted to quickly go through a second stock today that didn't experience a short squeeze, but experienced some very blatant synthetic short selling, where many hedge funds out there were trying to hold the price down. So CNEY, or CN Energy Group Incorporated, is a stock with just a 2.39 million share float. Again, another small company with just a $1 million market capitalization, again with 2.19 to 2.39 million shares in the flow and outstanding. Now again, this is data I checked from multiple locations, such as with MarketWatch. They've got 2.5 million shares outstanding, which is very close to the 2.19, 2.39 million shares. And all of the other data suppliers like Yahoo and everyone else has the float around 2 million shares. So on a daily basis, you'd expect a stock like this to trade 134,000 shares, 136,000, maybe just 48,000 shares, maybe even just 16,000 shares a day. Maybe some days you see a lot of shares being traded, like 3 times the float being traded in just one day, where it traded 6.1 million shares. Even that is AMC and GameStop numbers, where in January and June of 2021 and earlier this year in May and June as well, we traded 1 to 3 times the flow. But what you don't expect is what happened a few days ago on Wednesday, where a stock has just a 2 million share float and it trades 347 million shares in one day, over 150 times the float. What's even crazier about this is that pretty much every single minute on Wednesday, it was trading more shares than the entire flow, such as right here at 58 minutes past 9 or 2 to 10 in the morning, it traded 4.4 million shares. Again, a minute later, it traded 2.7 million, a minute after that, 2.1 million, and at the open, it even traded 40 million shares in 1 minute. How does a stock with a 2 million share float trade 40 million shares in 1 minute? That's the entire float changing hands 20 times in 60 seconds. This, I think, is actually the most blatant example of synthetic short selling I've ever seen. I think with CNEY, there must be at least 100 times the float sold over. There's not just 2 million shares in this float, there's an extra 198 million synthetic shares out there. Now let's also talk about what I think might cause this squeeze, which is massive liquidations across the market stemming from a market crash. And something that could trigger that market crash is something like the Magnificent Seven stocks failing. And an example of that would be Ken Griffin and Citadel advisors selling 79% of their Nvidia shares, or 9.2 million Nvidia shares, on Friday. As Previan Bull tweeted, he says he guesses the pump on Nvidia is ending. If these hedge funds like Citadel are selling out of these stocks, I wonder what's going to happen to them over the next couple of months. And again, Ken Griffin is out here as usual on live TV telling us that everything is fine with Nvidia, and that actually Nvidia is at the top of their game.
So none of us know where we are in this journey. What I will tell you is the team in Nvidia looks like they're really on top of their game right now.
Yes.
I mean, there's no ifs, ands, or buts. They have done just an incredible job. This is like the gold mining in California. Those that sold the picks made a lot of money. And it's very clear that Nvidia right now sells one of the most important ingredients in the AI story. And they've done an incredible job of capitalizing on it.
So there's Ken Griffin on live TV, even smiling and telling us, guys, everything is fine with Nvidia. They're at the very tippy top of their game and they're doing an incredible job. But as usual, we've got hedge funds saying one thing on live TV, but doing the exact opposite, which is selling 80% of his position. Now, the reason why that's bad for the market and could cause a market crash is because FDIC insured institutions are currently reporting $513 billion in unrealized losses on securities. So we've got these hedge funds, these banks and these institutions with massive unrealized losses. And all we need is something to trigger those margin calls before everything comes crashing down. And again, the thing that could trigger those margin calls is the collapse of the Magnificent Seven, where tons of hedge funds have massive amounts of their portfolio allocated to them. Actually, the Fed has even had to cut margin requirements for these big banks in order to pretty much save them. We've known for a while now these banks have maxed out their leverage, maxed out their borrowing, and have maxed out their capital utilization and are barely meeting capital requirements or margin requirements. It was planned to increase these margin requirements for banks, but it's known these banks can't take that increase. As we can see, the Fed has actually had to cut the big banks' capital hike in half in a sweeping overhaul. And that's because without a cut in these margin requirements, it's likely these institutions would be margin called tomorrow. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.